Additional Tier 1 AT1 capital instruments. Exploring the importance of AT1 in banking. Gender. Introduction to AT1 capital instruments. Features and characteristics of AT1 instruments. Issuance and market dynamics. Risk and return profile. Definition and purpose of AT1 instruments. Loss absorption. AT1 instruments are crucial for absorbing losses, which improves the stability of banks during financial crisis. Hybrid capital structure. These instruments combine both debt and equity features, making them unique in supporting capital adequacy. Enhancing bank stability. By utilizing AT1 instruments, banks can strengthen their capital base and enhance overall financial stability. Historical context and development. Emergence of AT1 instruments. AT1 instruments were developed in response to the 2008 financial crisis to enhance banks' resilience against systemic risks. Basel III guidelines. The Basel III guidelines were established to strengthen bank capital requirements and enhance financial stability worldwide. Mitigating systemic risk. AT1 instruments aim to mitigate systemic risk by improving banks' capital positions and ensuring financial stability. Regulatory framework and Basel III guidelines. Basel III regulations. Basel III regulations are designed to enhance banks' capital requirements and promote financial stability on a global scale. AT1 instruments. AT1 instruments under Basel III must possess loss absorption capabilities and maintain a minimum capital ratio for banks. Financial stability goals. Framework of Basel III aims to bolster global financial stability through improved risk management and capital adequacy. Hybrid nature and capital hierarchy. Hybrid securities overview. AT1 instruments are classified as hybrid securities, combining features of both equity and debt. Capital hierarchy placement. These instruments occupy a unique position in the capital hierarchy, influencing risk assessment. Risk profile implications. The hybrid nature of AT1 instruments affects their risk profile and treatment in financial downturns. Loss absorption mechanism. AT1 instruments overview. AT1 instruments are designed to absorb losses during financial distress, thereby enhancing the stability of banks. Loss absorption capacity. These instruments' loss absorption features can trigger conversion to equity or write downs, affecting bank operations. Financial distress events. In times of financial distress, AT1 instruments provide critical mechanisms for managing losses and safeguarding banks. Coupon payments and discretionary dividends. Fixed coupon payments. AT1 instruments provide fixed coupon payments to investors, creating an expectation of regular income. Discretionary suspension. Payments can be suspended at the discretion of the bank, especially during financial stress, which poses risks for investors. Investor risk. The potential for suspended payments adds an additional layer of risk that investors must consider when investing in AT1 instruments. Process of issuing AT1 instruments, regulatory approval. Issuance of AT1 instruments begins with obtaining regulatory approval to ensure compliance with financial regulations. Marketing to investors. After regulatory approval, banks market AT1 instruments to potential investors, highlighting their benefits and risks. Pricing strategy. Pricing of AT1 instruments is crucial for attracting investors and optimizing the bank's capital structure. Market participation and investment appeal. Institutional investors. Institutional investors are significant players in the market, often seeking high yield investments to enhance returns. Hedge funds attraction. Hedge funds are attracted to AT1 instruments for their high yields and potential for significant capital appreciation. Investment dynamics. Understanding the appeal of AT1 instruments helps in analyzing market dynamics and participant behavior. Secondary market and liquidity considerations. Liquidity levels. The liquidity of AT1 instruments in the secondary market can fluctuate based on prevailing market conditions and investor behavior. Market conditions impact. Market conditions, including economic events and news, significantly influence the liquidity of AT1 instruments, affecting trade and volume and price stability. Investor sentiment. Investor sentiment plays a crucial role in determining liquidity, as positive or negative outlooks can impact buying and selling activity. Credit risk and triggers for loss absorption. Understanding AT1 instruments. AT1 instruments are contingent convertibles that carry credit risk, essential for banks to manage capital adequacy. Triggers for loss absorption. Loss absorption in AT1 instruments occurs when certain triggers, such as capital threshold breaches, are activated. Impact on risk profile. Specific events that trigger loss absorption significantly affect the risk profile of AT1 instruments and investors' strategies. Yield and income generation potential. Higher yields from AT1 instruments. AT1 instruments generally provide higher yields compared to traditional bonds, making them attractive to investors seeking better returns. Income generation potential. Investors are drawn to the income generation potential of AT1 instruments, which can enhance their overall investment strategy. Associated risks. While AT1 instruments offer attractive yields, they come with associated risks that investors should carefully consider before investing. Impact of economic conditions and regulatory changes. Economic conditions. Economic conditions such as inflation and interest rates can influence the performance of AT1 instruments and overall market stability. Regulatory frameworks. Changes in regulatory frameworks can affect the rules governing AT1 instruments, impacting their attractiveness to investors. Investor vigilance. Investors need to remain vigilant regarding economic and regulatory shifts that could affect their investment strategies and AT1 performance. AT1 issuances by banks. AT1 issuance overview. AT1 instruments are crucial for banks to strengthen their capital structure and support financial stability. Major banks involved. Several major banks have turned to AT1 issuances as a strategic decision to enhance their capital ratios amidst regulatory changes. Motivations behind issuances. Understanding the motivations for AT1 issuances reveals insights into the evolving landscape of banking and finance. Analysis of market performance and investor reception. Market performance overview. Analyzing market performance provides insights into the attractiveness of AT1 instruments among investors. Investor reception insights. Understanding investor reception helps in assessing how well AT1 instruments are received during issuance events. Impact of issuance events. Various issuance events can significantly influence market dynamics and investor sentiment towards AT1 instruments. Considering past AT1 events, historical performance analysis. Analyzing historical performances of AT1 instruments helps identify patterns and trends that can guide future investments. Strategic insights for investors. Investors can gain valuable insights from past AT1 events that inform their strategies and risk management approaches. Lessons for issuers. Issuers can learn critical lessons from historical events to enhance their issuance strategies and investor communications. Conclusion. Importance of AT1 instruments. AT1 capital instruments play a crucial role in maintaining the capital structure of banks, contributing to their financial stability. Features and dynamics. Understanding the features and market dynamics of AT1 instruments is essential for informed investment decisions. Historical context. The historical perspective on AT1 instruments provides valuable insights into their evolution and role in financial markets. Thank you.